What's going on, team? How we doing out there? Let's go ahead and get, of course, start swing trading started. I'm excited for another show here. Let's, of course, talk about the market, take a look at my trades, and then, of course, look at what was hot in the market, what was not. We got, of course, Scott Brown going to be joining us today a little bit later. Beatthebench.com, of course. You guys can check it out. I'm excited to have him back on. You guys smash the like. Let's get to the action. Let's take a look at what's going on right now. Of course, we got the market kind of moving down today a little bit. You guys can see the S&P or the SPY in my case here. It's down about 3.97, about 0.95%, and rejecting the area to go above, right? We've been looking at this kind of as resistance into the 417, 416 area. Now, multiple rejections in this area get us to start thinking, are we going to get the rejection? Of course, we drew this box on April 6th. Now it's what? May 2nd. We are clearly up there. And of course, we drew that when we were down here in this range below the 400. We made our way to that spot, but now it seems like we're rejecting from those levels. So we're going to need a good report, something like maybe an Apple report on Thursday to get us higher. That could be a potentially catalyst to get us higher. But of course, if we start seeing a turnaround on the tech trade, that's where I think we need to keep our eyes open and looking to see what happens. But let's go ahead. Let's get into the action. Let's go and talk about what I traded today. I did get a profit take, so let's talk about the profit, and then we'll talk about the loss today. And there was one trade that was pretty much break even. Let's talk a little bit about our trades. So first trade for me that was a kind of a loss on the day was Airbnb. But was this really kind of somewhere where I could have maybe held? Yeah, I maybe didn't give myself enough risk, right? It's right back to where my entry was. Did lose on this one, cut out this morning at the 119.50s. But like always, one of the things that I want to do is just keep to the way that I was looking at the trade. That's what matters more to me. What matters more to me is not the ending result, but the processed approach, because that's really what it's all about, team, right? We're never going to know exactly if we're going to get into the green. The only thing we can do is try to be in a processed manner so that we can be repeatable. That's what we're trying to do here. And I hope that you guys can learn from my trading. Let's keep going to it. Let's take a look at the winner of today. That's going to be the SQQQ trade. And it really wasn't a bad trade at all. Actually was able to get some out today at 30.02. And of course, we had this one from just back here at 28.81. Nice little 4% trade right back up there towards the 30s. And if I can get my 4%, why not take it and run? This is one thing that I need to clearly continue to work on. Of course, today I nailed it, but this is what I want to be doing, right? If I can get to that nice little chunk swing, and it can be even overnight, just one day, get me to the profits. There's nothing wrong with taking the profits and running. In this case, definitely helped me out. SQQQ covering, of course, that loss on Airbnb, giving me a little bit more. And then, of course, I did have a break-even trade today. And this was more about the market going against me, seeing that tech was pulling back, Oracle was coming back fast. I didn't want to go ahead and be long the SQQQ, which was, of course, technology breaking down to the downside. So I was like, you know what? I'm going to actually stick with the SQQQ because I could see that tech kind of pulling back right now, but I'm going to cut the Oracle because it'd be kind of going against the position. So that's what I did. I cut the Oracle right below break even and was able to go ahead and take a tiny loss on that. And then, of course, later on in the day, take profits in the SQQQ. So that's what it's all about, team, trying to find ways to balance out the position. Sometimes you're going to be on both sides of the trade there. And what I did was more along determine, hey, how's it looking in the morning? If Oracle would have been ripping and tech stocks were continuing higher, I probably would have cut the SQQQ and kept the Oracle. So not too bad of an outlook here on Oracle, SQQQ. And of course, we took that trade on Airbnb. Now let's go back into the market. And one thing that's clear today is destruction to the downside, at least overall. Every sector in the red. So what does that show? That yes, we are getting some pullback in some stocks. we can definitely take a look underneath the hood. All right, catching up with the chat. How we doing out there? It's good to see you guys in the chat. What's going on out there, team? Easy Mike, Walter, Carmen. How we doing out there? What you looking at, Carmen? All right, we'll see what else is going on out there. Yeti being talked about in the chat. I'll definitely take a look a little bit. And Fresh, what's up out there? How we doing? Christine, Benzinga member, never miss morning prep. Been passing by this offering, but thought today if the show was dedicated to swing trading crowd overnight to beat the PDT rule. And that's really what it's all about, right? I mean, some of us have that PDT that we have to keep in mind, right? And swing trading is one of those ways that you could really start getting around the PDT. And another thing that I talk about on swing trading is that I feel like a lot of the times I have a very easier method in controlling my risk in a swing trade compared to controlling my risk in a day trade. Day trades move really quickly. A lot of the times we're taking really quick risk to reward, right? Well, in this case, in swing trading, I can take those longer trades, give myself room to work. And a lot of the times this take up smaller capital because I can come in the position with a smaller share size, looking for the position to work in my favor. And of course, keeping the risk as minimal as possible. We'll see what happens. Like always, smash the like, guys. We're going to keep going. We'll cover some strategy. And glad that you were able to tune in today, Christine. So caught you in the chat, and let's keep it moving. All right, let's go to some other action here. Let's see what's going on in the market, right? Let's go in. First thing I want to point out is the destruction. Normally, we start at what did good today, what was hot. But when such things are weak, let's talk about what's getting hit hard, right? So clearly we can see what? Energy pulling back, right? This is as clear as day, right? I mean, just complete destruction today. Let's start looking at some of the bigger stocks here to see if there's some names that are getting hit harder than others. XOM was one that we were clearly drawing out that had the support below. And we were wondering, would we cut right back through this line? We updated this yesterday, and there you guys see it right back towards that 110 and filling in the gap. So this is a hard turnaround right back at the top. And let's take a look at the XLE, which is very similar to XOM. And this was weak, really weak, just a while ago, right? This was when we were cutting down through here in March, and we cut back down. When OPEC made that mention, yes, we were able to pop up, but we're quickly coming right back down. So we need to keep an eye out on these oil trades to see if there's any of these we want to come after. Valero back down to 110. You guys remember I was trading this one at one point at 136. So look how quickly this one came right back down, and it's actually lower than it was in March. Oxy coming right back into those March numbers. I know that Warren might go buying again, but will he be able to save Oxy every time? The truth is it could easily turn around, and then Warren just buy it on the discount, right? If he sees it truly going down, does he really need to buy in the 57s? That's one thing that I'd keep in mind, right? Chevron, another one that, of course, had mentioned that huge buyback, had made its way back towards the 170s and quickly right back into the 160s. So we need to keep on watch. I also talked about Slumber J yesterday, right? Would we get back above 50, start making our way up, or would we just reject and come right back down towards these lows? And you can see we're rejecting right now, and it just looks like the oil names are starting to break down. Let me take a look at WTI. Let me just take a really quick peek. I see it around 71. And what did I talk about today on pre-market prep? I like to always kind of refer back to what I was looking at this morning and what was my outlook in oil. So I talked about that I'm looking at oil right now to see if we go back into the 72 range. 72 and below was the breakdown that happened last time. And that's when we really started seeing these oil stocks come down. So I'm going to keep an eye out on that. If we can get back into the 60s, I definitely will be looking for these oil stocks to continue the breakdown. And I can look for stocks that were at the top, not the bottom, because if they're at the bottom, they already broke through support. Not going to be able to play catch up on those. I'll be looking at other ones like XOM that got to the top of the range and now are rejecting it. So we'll see what happens there on Slumber J, XOM, the oil trade. Of course, you guys can look at some other names. There's like EQT. You can see how this is starting to go a little bit lower. Keep an eye out on some oil names to see what happens here. And of course, you got PSX that was looking really good for a move back through 100. It made its way back up and now quickly rejecting back towards support. If it breaks through this lower support around 91, we could see it start giving up in the 90s and just starting to come down. We'll see what happens there. Phillips 66, and there's some other plays you guys can watch in here. Of course, we'll keep an eye on it. All right, let's keep going. Christine asking, can you teach over time the trade secrets to picking a stock at highs to sell the next day? Example, I never buy at open bell as I've never seen this successful. 4 a.m. buys the same. Well, the truth is that you got to try to find what works best for you, Christine. Sometimes you'll see that I take swing trades, and a lot of times I open the position in the morning and I'm holding towards a certain risk, right? And in this case, a lot of times when I'm taking this, right, I have like a small account challenge that's going on right now, but in this account, I don't have to worry about the PDT. But if I did have to worry about the PDT, right, what would I be worried about, right? So things that you can do, right, is always think about trades. Kind of what I do is I think about them as a day trade first and a swing trade after. It's kind of like I'm trying to use my day trading ability to get pullback entries a lot of the times, look for that swing higher, and then hold it overnight if I can get a nice profit move first, right? I'm looking for that first profit move. If I can already get towards that first, let's say I'm up 2, 3, 4%, that makes me feel a lot confident going into the overnight action. Sometimes I do take things towards the end, and you just got to find what works best for you. It's not going to be just one perfect. And after hours, what I would say about buying things in after hours is that technically, I mean, this is not always going to be the best time to buy. I personally haven't had much success buying things in after hours and then selling it the next day. But sometimes I do have success getting things really close towards the close. And what I'll do a lot of the times in those cases is look at the chart more on the daily aspect, because why? The candle's about to close in the end of the day, and I'm trying to see where the stock is going, right? And so that's just one way that I can look at it. After hours trading, I really don't have the biggest experience in, so I'm not going to tell you that I know exactly how to master that trade. But like always, I'm just going to be transparent with you guys about what I know and what I don't. Let's keep going. Let's get into the market. All right, we talked about energy. Let's go to financial services. You guys saw from my thumbnail, regional banks getting smashed, and this was definitely a concern, and it's something to keep watch, right? That we got to keep watch to see what happens with this situation. This could turn the whole market around. I really do think so, because it could slowly leak into more and more contagion thoughts that slowly start getting profit taking in technology, and then going away to different rotations, right? We'll see what happens if that does start to actually play out, but something to keep in mind as we're seeing these regional banks come down. So let's take a look at regional banks, right? The regional banks we could take a look at here. Let me go right here towards the regional banks. We got global banks here. There it is, regional banks down 3.78%, the industry overall. And we were going sideways for so long. That's very important, right? We were going sideways. We started making our way up, but then we started really breaking down, and that started last week. Now we're continuing through with the downturn, and there's some really bad stocks here that got hit today. PACW, of course, we've talked about this one on pre-market prep. Another hit there. MCB continuing down, right? You got Wall that started making a way up, gapped up, now filling the gap on the downside. This is not good outlook. Zion going down. HMST, Home Street. All these not looking good. And I'm not even bringing these up because I necessarily think that these are shorts, but more along protection for you guys out there that are maybe thinking that this is going to go away. For a while, I thought it was going to go away, and it did. But it roared its ugly head. And we got to be careful now as we see these banks start to get hit. And it's not one, right? You guys are seeing it. I'm running through it. And I love running through charts like this because you can just see it, right? If the whole industry is going to be making another leg down, well, we got to be careful out there because it could be some more destruction and maybe some more banks going out of business very soon. So we'll see what happens. And if this continues, does this start to affect the overall market? Because we were going down there when this first started, but quickly technology started rising really fast, right? So that's why I'm keeping an eye on big stocks, right? You can keep an eye on like a JPM. Look how that started to turn around. Goldman Sachs was one of the ones that we were looking at potentially for a short yesterday. It already started to break down today. I still want to swing trade this one to the downside because I think that this one still has more potential to go. I missed the first move today. That doesn't mean that I can't continue to trade Goldman Sachs because I think that 340 was kind of the breakdown today. And man, did we break down from there. So just keep watch. We talked about this yesterday. We even drew this line, how we kind of came up through that. Look how we break it today. Created that on 5-1. We actually created this on April 10th. We extended it up a little bit. And now that we're breaking that, you can quickly see how we come back in. Bank of America is another one that I think eventually breaks this 27. So it's not like I can just go after the bigger banks. Right now, I would stay away from this trade overall. It's very difficult to short these and very difficult to long these right now. So in my case, it's just a no touch. But I do want to, of course, put this out there because if this continues and we see Bank of America, let's say back towards 25 to 20, right, starting to get hit, Morgan Stanley, right back to where I sold it at. I got 10% on this move, and you can see that one keep going down. Check Morgan Stanley's call, bro. There you see it. Morgan Stanley. You can see that. Remember, I actually traded this one. We traded this one short from about 95 down there towards around 86. And then this thing is now down right back towards that 86. Could go lower. And this was one that had good earnings report back here in, of course, January, put out new earnings, and then now starting to get hit again. So all these stocks not looking good. And this is why I think that we could see a turnaround from these levels in the SPY. And a big part of that would be what? The Qs finally turning around. They've been on a massive ramp up. We're going to see if they turn around. And a lot of that will be based on what? Of course, Apple later in the week. We'll see what happens there. Let me take a quick sip and we're going to keep going here. Like always, guys, smash the like button out there. If you guys are enjoying the action, we got a lot more to talk about right here on Start Swing Trading. And of course, we got our guest coming with us in just about 10 minutes. So definitely hit the like button. We're going to keep pushing forward, team. All right, I got a quick little trailer here from Benzinga for you guys. I'm going to get that started in just a couple of seconds here, but definitely smash the like. And if you guys got a stock or a big mover on the day, definitely throw it up in the chat. We'll take a look. And if you guys are looking at Stocks S, Stocks L, AMD, we'll take a look at that, Raz. No worries. I did see multiple people talk about AMD. I was actually looking at NVIDIA for potentially a short, but we'll talk a little bit about that coming up. AMD, of course, earnings after the bell. That's where it gets a little bit scary because playing NVIDIA on a day that AMD is going to have earnings is really scary. But we'll find out a little bit. Definitely smash the like button, guys. I'm going to go ahead and play that up. It's taking a little bit longer than I wanted to upload there. So no stress, team. I'll just keep this going. Let me just take a little sip of water. All right, guys, let's go ahead. And a lot of talking today. So let's go ahead. Let's keep a look at what else is going on. Financial services, we're going to get out of that. Of course, just keep watch because I do think that this could continue breaking down. And of course, you can see here kind of like the trend line that we started breaking. I already had this drawn here. When did I draw this? We drew this on yesterday. We were already looking for the break. There you guys see it start to break down and continue here on financial services. Does not look good by any means. Citigroup, another one that could keep going lower. I could see this one getting down there towards 45, 40s, especially if we get more concern. But I'm not taking shots on these. Why? Because at my case here, I don't know what's going to happen with the banks. I can try to pay attention to what happens to tech to see if I start seeing a rotation away and profit taking in tech and see it kind of rotate somewhere else. Does it go to defensive names? Does it go to industrials? Does we see oil start really taking a down hit? And that's what drags the market, because if oil's going down, financials are going down, and we see profit taking in technology, will we see a sweep where it comes hard on the downside? That's where I'm kind of keeping a concern on what's going on in the recent price action. Of course, I'm finally starting to get back in tune with the markets today. So I will start opening up more and more swing trades as we get later on in the week. I didn't want to push too early on. So of course, I've taken about 3 since I came back today. I don't got anything open right now. So I might be able to take something towards the end of the day, but we'll find out, right? Let's keep going. Let's go towards another area. Real estate, kind of also getting hit here. This is not an area that I talk about often. So I'm just going to keep moving away from real estate. Let's go to technology. Technology really starting to show a little bit of some topping action. And you can see here, we tried to start coming back here yesterday, making kind of like a hangman look. Now we'll start taking a look to see if we really start coming back down and start to break down. Of course, what led us up in this rally, a lot of it was the bigger names, right? Apple getting higher, right? Microsoft going back higher. Google. I remember the 90s. We're still in the 106 range. We'll see if this ever turns around, but it is trying to leap its way back through the 110s. And I think this is what's going to matter, because if Apple can go through new highs and really give us a nice earnings report, yeah, maybe we can keep going. But if Google breaks down here and then comes right back down, keeps going through the 100 on the downside, back through that 90, Apple rejects here, let's say 170, comes back into the 158, 150, that's where it'd be concerning. Apple's probably one of the strongest charts out there right now. I still think it's very strong. It's just going to need a good earnings report. And of course, we never know what's going to come on the earnings. All right, so let's go ahead. Let's talk a little bit about some other trades. Let's get out of technology. Let's keep moving away from that. You can see basic materials is kind of the leading sector right now. It's actually up on the day. It was in the red when we first started the show, now in the green. Why is it in the green? Gold and silver, baby, really getting started on there. So you guys can take a look at some of these plays. There's WPM that looks good. This one, nice little kind of cup and handle. Do you guys see it? Nice little cup and handle pattern. Nice little pattern right there on WPM. We'll look to see if this one can keep going. And there's some other ones, right? GOLD. Nice little cup and handle look right here too. So I like this one to go through 20s. Already was holding 19s as of late. So you guys can keep an eye out on this gold trade. And especially if we're going to get the turnaround to the downside, yeah, I think the gold trade continues higher. So we'll see what happens here on the gold trade. And a lot of this also, the outlook of the bank's concern and how people want to go maybe to banks, to gold to try to make sure they have the value. We'll find out what happens. I mean, this is more speculation type of trade, but I think you can kind of continue to ride the trend as far as you can ride it. We'll find out. All right, catching up with the chat. What's going on out there? Armor plates. No, you cannot copy my trades. I mean, like always, at the end of the day, if you want, that's up to you. But I tell you right now, you're not guaranteed success, right? I mean, like always, if you guys look at my trading ideas, that's what it's about, right? It's about learning more about the processed approach than to actually copy. That's not what I'm here for, team. That's not what it's about. I'm not an alert system. Trust me, you can find plenty of algos to do that for you. How we doing, Crow? Crow in the chat out there. Welcome back, my friend. It's good to see you in the chat there. And I will let you guys know a little update on a stock that, well, just didn't turn out for me today into the good, was QH. QH didn't turn out to be the best trade there for me. I'll talk a little bit more about this one on live trading tomorrow, but I wanted to give you guys the update. I did end up getting stopped out for a very tiny loss on QH, and a lot of that was just not sticking to my planned approach. But let's keep going. Let's get back to the market. Of course, healthcare names also in the red today, pulling back. We were looking at the drug manufacturers, the big boys, right? How are these doing? Well, it's a little bit of a mixed signal right now. I talked about how I was looking at Johnson & Johnson, and that chart looked really good on the daily. You can see how this actually just went higher today. Nice little break of the trend line, and it looks like it wants to continue going. One thing that I liked too was this one tried to fill the gap and then just rejected that gap fill, started just chugging along, and now looks like it wants to get up there right back towards 167, and we'll see if it can get back towards the 200 and moving average, 166.88. All right, let's keep going. Johnson & Johnson, Lilly, I think those are the stocks that have really kind of pushed away. Look at this now, creating kind of the bullish cross here and the golden cross, and you can see that just pushing higher. Lilly, Merck, all looking really strong today. AbbVie, one that did come down. I'm wondering if it starts making its way back up, but it's struggling right now. We'll look to see if it makes the move to 156. AZN, one stock that I'm looking at, will it potentially kind of come right back down to the downside with kind of COVID vaccine mentions, but nothing today. Pfizer did get hit today with that same mention, right? We found out about their COVID vaccines and how they're not doing that well. And that definitely affecting the stock. It's coming right back down here, even though it got a little pop in the pre-market. All right, we'll see what happens on that one. Bristol Myers coming back a little bit. This one's still not really getting going. So I'll see if this one ever wants to get past 70. I'll keep an eye on it on Bristol Myers. And just to kind of mention the last two here, SNY and GSK, kind of on a little bit of a pullback. We'll look to see if GSK takes that next step up and starts pushing towards 38. All right, getting out of healthcare, consumer cyclical, not doing the best as that starts to turn around. And I talked about it. High beta names are the ones that kind of turn around really quickly when the market turns around. So we're in this sideways consolidation, and it's going to matter what happens here to see if we get another run or we get a breakdown of these charts. A lot of these are like logic charts, right? Like let's take a look at this. This actually looks positive here. As you're starting to push higher, look at this industry, team. This is actually one that I'm catching here right as I speak. Right. So look at this nice little setup on lodging as this looks to try to go higher. We'll keep an eye on it. Does it break out or does it break down here? Look at Marriott. Nice little breakout today in Marriott. Will this continue higher? Get back up here towards the 181s. Nice little day there for Marriott as this pushes. Hilton looking like it wants to push towards 150. This will honestly something that I'll keep an eye out for because a lot of these are showing the move. So it's not just one. It's an industry-wide move. So it's something definitely I keep on watch. We'll see if Hyatt can start making a move back towards 123, where it was just a little while ago in March. All right, we'll see what happens on these. Of course, if we do get the SPY to break down, these will probably also break down, but I'll keep an eye on this. And this doesn't make me think recession is coming anytime soon. All right, let's keep going. We'll take a look at what else is going on out there. Julian, please look at Workhorse. They're in talks with USPS again and could be $1 billion contract. Julie, I'll tell you what. Julie, I actually got my job here at Benzinga because of Workhorse. Or at least some may not know the story, but really it was Jason Raznick that was on PreMarket Prep, and I kind of brought the research behind Workhorse and why I liked it. It eventually made a move from $3, and this was when I was calling it out. It made a move to like 13, and it was a really nice move, right? But I also went through both sides of that, right? I talked to Steve Burns, the former CFO, and I really looked into Workhorse, and it just seemed to me like they just couldn't meet what the USPS wanted, right? USPS was dealing with them for a good while on those vehicles, right? And then it ended up turning out to be, it went to OSK, right? Akash. And then so one thing that I'd keep in mind is, will they be able to actually get that contract? It could give them the lift. I saw them getting a little lift today. Workhorse getting up there back towards about $1. And they still got the kind of like the Dragonfly drone behind them. But Julie, I look into Workhorse. Like always, I can't tell you what to do. I wish you the best on Workhorse. I know I've called it before, but right now I don't see that they have the capabilities to do this. But of course, I might be a little bit off of it because I haven't been watching Workhorse for a while. You go ahead and do your research. We'll see what happens with Workhorse. And of course, I know you'll keep me on it, Julie. So we'll keep an eye out to see if they get that contract from USPS. All right, in a second, we're going to get into our interviews. Definitely smash them up. She said, I like them at 110 now. Hey, we'll see what happens. All right, at Mitch, does Benzinga sell merch on the website? I like that tee. Yes, we do. We do sell this tee too, a nice little sports collared shirt. It's nice. It's a little tech shirt. But I'll give you guys that. That's swag at benzinga.com. I got to get some new stuff on there, Hawaii. So you know what? In the next couple of days, I'll get some new stuff on there, Hawaii. And we'll make sure to talk a little bit about our swag that we have. All right. Do the market algos work all hours or just day? No, they work all hours, man. The algos don't sleep. But it all depends on the algos that you're talking about, Christine. There is some algos that are going to work after hours. There's going to be some algos that only work in the intraday. And, of course, a little bit of a mix with probably a little bit of both. We'll see what happens. Let's get out of this. Let's go back. And no, Urban, you won't get your Benzinga Speedo in the mail. So I'll keep that one to the side. Let's go back to the market. We're going to go ahead and bring on Scott in a second here. You guys smash the like. I'm excited to go ahead and get back to beat the bench. We'll see about this 420 and, of course, the overall market. Also keeping an eye on NVIDIA. That started to turn around today a little bit. AMD reporting after the bell. What will happen to AMD? it does have a bullish setup for a little bit of some upside action if it can get a nice little move off the earnings. But will that happen, right? If it doesn't, I think it will be pulling back here closer towards 84 and 80s on the pullback. We'll find out. I think this is going to be a big part of if we start to see tech turn around or another leg higher. We'll find out. All right, getting out of AMD, I'm going to go ahead and pull my charts down. We'll go ahead and get to the interview. You guys smash the like. We got Scott Brown, CMT. I'm still working on mine, but we'll get there one day. Let's bring him on here. How we doing, Scott?
Hey, I'm good, man. Thanks for having me. How are you doing?
Oh, it's always good to have you on. I know that you've been keeping up with all the action for a while there. It seemed like, the regional bank concern really went away, but it's roaring its ugly head right back towards that. So what have you been seeing in the market, Scott?
Yeah, you're right. It looked like, they were never totally out of the woods, but for a little while, it looked like maybe the problem was kicked down. We kicked the can down the road a little bit. We saw like broker dealers rally, regional banks got like one good day. And then those First Republic earnings kind of made it clear that, we're right back into this. So financials are still lagging, but I think, without being too negative or too doomsday, there's definitely some tactical problems in this market, very short term, but also bigger picture. So I'm going to share my screen if that works.
Let's do it. Let's get those charts. That's what it's all about. I even put out a tweet. I was like, can't wait to get the charts. All right, we'll get those up right now. You see the present down there below. We'll get it running here. And like always, team, smash the like out there. If you guys want to check out Scott Brown, I'm going to go actually throw up your Twitter link right now. If you guys can give him a follow and, of course, keep up with everything that Beat the Bench does. All right, there, the link's up there. And I got the charts up. Let's do this, Scott.
Cool. So, I always like to kind of talk big picture because even if you live in shorter time frames, I think it's always kind of important to start big and kind of work your way down and know what you're dealing with. And just, real simple, where are we at on the S&P 500 and the dollar? And we know that they've been really, really strongly inversely correlated, over the past 18 months or so. Well, here we are up into resistance with the SPY. And here we are kind of right into support for the DXY. So already, while we know that the trends shorter term are supportive, we're kind of at the place where you probably don't want to be getting super aggressive on stocks, and it might make sense to see some equity weakness, which definitely ugly candle there right at the 420 level yesterday. And then also a little bit of dollar strength that we've seen to kick off the week. And, bigger picture, everybody likes to talk about alts. I'm not a big believer in alts. I'll look at commodities, but I think that most asset allocators out there have two main choices. It's stocks or bonds. Is it a time to be overweight stocks or is it a time to be overweight bonds? And while this is a much, really a bigger picture chart than I normally deal with, this is SPY versus TLT, long-term government bonds on a monthly basis. We just got a monthly or, any negative move this month will be a monthly MACD cross for this ratio. And you can see last 20 years, we don't have too many of these, but they never are kind to the stocks to bonds ratio. So I think from a bigger picture standpoint, really kind of shows some signs of exhaustion out there. And then just back to, shorter term time frames, there's been a lot of talk about, the rush to staples and bad breadth and things like that. And there's a lot of staples on the 52-week high list are right there. But even SPLV here with a MACD sell signal tells you maybe those low vol things, short term, maybe they've had their run. Another big concern is small cap growth. I think you could arguably view this as just a huge consolidation pattern within a bear market for IWO. It's going on a year, but eventually it's got to break. And right now, really looks like the risk is to the downside here in this uptrend line that goes all the way back to June of last year. Could be at risk of breaking. Certainly the relative chart supports further weakness. And then back to, what's working? Well, you got gold miners spiking and holding up above their January high. So this is, finally for maybe the first thing that fits into a swing trading type thing. I mean, this is just a very attractive chart here, long GDX, and you're out if you're below the January highs. Right there at about $32.50, $33 a share. So, I mean, it's just hard to not like gold miners right there. which have been leading. Also kind of a strange thing. Normally, you wouldn't expect to see gold miners, leading the S&P 500 6 months off a potential major market low, but here we are. And so that's kind of the bigger picture things that I'm seeing that kind of give me some concern. And what does that mean? We start looking at shorter term time frames. Probably want to have a little bit of a negative bias, kind of be looking at those weaker stocks. If you're looking to play things on the short side.
Yeah, it seems like it. And I clearly am starting to see it too. And of course, with the growth outlook is that it started to come in for a little bit. And even you could have, when we were seeing this kind of recent tech kind of really pushing, it was the bigger names, right? And then we started seeing a little bit of movement and growth. And then really quickly, boom, it's right back down. You could see it with that kind of the growth outlook you just brought up, or I just look at ARKK and that always tells me it all. But definitely we're starting to see the growth names come right back down towards those lows. And that's when it gets concerning, because I think that the financial services, yes, are going down. And yeah, we can maybe rotate around them for a while, but if they really come in and we even start seeing maybe, let's say, the bigger banks starting to come down, do you think that this market can hold up? I don't think so, Scott.
Yeah, and I think the bias kind of there, that's a great tee up for one that I wanted to pull up. JP Morgan, everybody can see it. Everybody knows it. It's the clear best bank. If you were forced to be long, something in financials, they're either going to be long JP Morgan or like Berkshire, but it's really tough to be long JP Morgan if we're below 145. I mean, just look how clear this previous support turns into resistance level is, short, and you're out if it breaks up above 145. But I just don't think that the technical momentum, there's a MACD sell signal there, a day or two away from it, is really there to support that. Berkshire also on false breakout alert. We're okay if we're up above 320, but close to a MACD sell signal. And this is the best thing out there. We know, KRE and everything's in free fall. But yeah, if these JP Morgan and Berkshire are the top two stocks in the financial sector, if we lose those and it's even short-term downdraft, what does that environment look like, or what do those couple of days look like for KRE, which is getting pummeled down 7%. So I definitely think there's a lot of risk there, and I don't think that the market's just going to be able to shrug that off. Yes, it can shrug First Republic going away, but I'm not sure that that's just the end of this story. The charts aren't great for much of anything in the financial sector.
Yeah, it's really interesting. It's something to keep an eye on, if we're going to get more banks to show up. I mean, it doesn't look good right now. It definitely doesn't. And I think that as we keep seeing more and more for a little bit there, you were thinking maybe the bigger banks may get some consolidation, and maybe that's where I want to be. But I'm starting to see those turn around. You just talked about JPM. I talked about Goldman Sachs starting to turn around today. Bank of America, really quick lows there that can go. And if Bank of America starts making its way down towards, let's say, 20, things like that, I really start getting concerned. And then there's one that I've talked about. I don't know if it will ever get more concerns out of this one, but what about DB? Man, DB was one that I saw go down. Deutsche Bank. It's just hanging up here, and I see resistance just like you see it in JPM, in DB. I don't know if you want to bring that up, but you could see that right there, right around the 11s. It's a lot of rejection in that space. So we'll see what happens to this one.
Yeah, and I mean, Europe and the European financials were so strong. They had a really, really sharp correction, and the bounce back hasn't been, let's call it, super great. So it's definitely something to kind of watch there, especially with, I think for those European banks, they really benefited from the kind of interest rate normalization. But if we think interest rates are, maybe moving back down, which that's my view. I think that's the view if you think there's going to be a real kind of crisis, a real, rush to safety. We break 3.3% on the tenure yield. I just don't think that that's great for European banks. So, I mean, they've been pretty good in relative terms, but I'm not loving the absolute strength from them as either.
Yeah, and then of course technology has been really strong. Is there names there that you could see turning around, Scott? I know there's been some absolute monsters, Nvidia, I know we got Microsoft. It went pushing higher. What do you think about the big boys and some of these major techs?
Yeah, I mean, so when I look at the, kind of the macro, and we know how much of, it's kind of been beaten to death, how much of the gains that those stocks have accounted for. But it makes me a little bit nervous, but you cannot argue with Microsoft if it's up above these August highs. Call it 294. I mean, it's just a great chart. NVIDIA just cannot go down, just broke out of that little consolidation there. And there's still some other semiconductors, even after a really sharp correction, that look pretty strong. But I kind of see more strength in the staples, which is maybe a concern. I mean, things like here's Molson Coors with a huge move out of this
Monster
consolidation
move
here. I mean, this is, it's overbought, but I think this is certainly something you'd want to buy on a pullback. The other thing, anything related to like used cars, car parts, or keeping your car forever. I mean, here's O'Reilly, maybe a big picture breakout, but it's just long and strong if you're up above 870. Copart, looks like 52-week relative highs. It's right on the verge of a breakout to new record highs. I think they deal in like the used car auto market and big industrial stock there. And then, Monster. This has actually been on our concentrated equity buy list, which we'll update here on Thursday. But, basically had it in since the beginning of the year and just kind of had to wear it through it, just going absolutely nowhere. But once it went, it's gone in a huge, huge way the past week or two. So that's really where the strength is. I mean, for all this talk about breadth, there's been more highs than new lows in the S&P 500 for the past month. But I think you can definitely quibble with what's making new highs. It's almost exclusively very safe, boring type stocks.
And we started to see some of the other ones. I started seeing like industrials turn around a little bit, like the Deere trade. That started pulling back a little bit. And I think that we're going to start seeing this battle, right? For a little bit there, started seeing the euphoria in the market, right? A little bit of some FOMO action. Everybody wanted to be a part of the tech trade. And, it quickly goes towards the euphoria side. And that's when I think that we get too extreme and we start getting a little bit of some pullback, some profit taking. And of course, the bank scares, I think, could even push those profit taking a little bit faster here. It seems like that's the psychology at play. I don't know if that's how you see it, Scott, but definitely that's how I'm looking at it right now.
I do. I feel like, people, those Brett stats, the gains are all 90% of the gains are from 7 stocks. Those kind of things always feel like people kind of grasping at straws. And it just felt like people felt like the breakout was kind of becoming a little bit inevitable. But resistance is resistance until proven otherwise. I wanted to point out, I got a couple other just weak names, for people who are looking on the short side.
Yeah.
I think so. Energy is getting crushed. We can talk energy real quick. I mean, Exxon's been the best in energy, but on its earnings last Friday, failed to break up to a new high. Looks like it's failing here. I think this is really, my bias is this is the last one to go, and that it's more downside for Exxon. It's probably the best one to own, but I think there's more to go in the energy space. But I actually don't think it's the weakest sector technically. I'd give that to real estate. Maybe even more than financials. This is Crown Castle, one of the biggest cell tower REITs out there, right there on 52-week lows, multi-year relative lows. And I think American Tower making 5-year relative lows probably has a good chance of revisiting its lows from back there in October. So those, whether you get short and use kind of the April highs as your stop loss or wait until we kind of potentially take out these March lows, this is just a bad looking chart. In a bad sector. And then, another one that's been good and is green today, but even old Amazon, the 200-day moving average is starting to flatten out. I think that this is probably the bottom for Amazon, but even short term, we kind of have broken this little bit of an uptrend line. So maybe that just feeds in to some market weakness there for, a very big, very important stock that's already kind of gotten past that earnings report uncertainty, whatever volatility and kind of coin flip that those always bring. So there's just a lot of things. I don't want to be a doomsdayer. I think we're a long way from the October lows. We did a big study showing there are a lot more stocks as of last Monday that were in 5% within 5% of their 52-week highs than anywhere near their 52-week lows. But very, very tactically, we just see those MACD sell signals everywhere, and here comes the volatility.
Yeah, and I think a lot of that is once again the regional banks coming right back into play, right? I mean, that definitely could turn the story around. There was a while there, if it completely went away and there was even no concern, and maybe FRC didn't turn around and disappear, I think you might have gotten the path of least resistance just to keep pushing us higher and higher and higher. But now that we actually have some focus in the macro situation and it doesn't look all rosy, things are starting to come into play. We'll see what happens. Like always, you guys can keep up with, of course, Beat the Bench, and definitely hit up Scott if you guys got questions on charts, or you're just looking at industries, sectors, and you want a little bit of an outlook. I'm sure he's always willing to go ahead and kind of give you guys an outlook. Hit him up on Twitter. He definitely has a really good newsletter that you guys can get into. Definitely check it out. Scott Brown, CMT, founder of Beat the Bench. We'll have you back, man. It's always good to have you on.
Thanks for having me, Mitch.
Take care, Scott. All right, that's going to do it for us today. We got about a couple minutes left here. We'll do a little bit of some ticker time. So if you guys got a stock you guys want to check out, this is your time. Throw them up in the chat. We'll get through it. I know that we were taking a look at kind of like looking at AMD. Let's go ahead. Let's take a look at that and see how it's doing on the day. We've talked about how would this one get the next step up. It did get a nice little pullback action in the recent days, right? It did get 2 days of pullback, and now we'll see what happens with the earnings. I think this is going to really make or break it for NVIDIA. If AMD starts showing some concern, or maybe let's say they get hit on their earnings, I think we could see NVIDIA down big. And look at that, team. Just as I was talking to Scott there, I was looking for an NVIDIA short. Look at that. That's already going through there from 283 to 281, but man, I'm going to miss this one already today. I was thinking about taking a shot on this one because I have a feeling that AMD, even if they give good earnings, might not go up. But we'll look at it tomorrow to see if we can tackle this. NVIDIA, I definitely think if it turns around, it's because AMD gives it that really hard knockdown right back towards this support. We'll see what happens in NVIDIA tomorrow. Of course, AMD's been jumping up and pulling back while NVIDIA is getting that next higher move. So I want to start seeing if we start turning around on these trades. And of course, AMD will affect some other stocks. You guys can keep watch. Semiconductors, we'll see what happens on like Qualcomm and others to see how they move off of this move. Marvell can move off of this move. We'll see what happens to these. Micron can move off this. Micron looks like also another one that is just really toppy, right? It hasn't had the best report. And it did go higher, but if it breaks here from 65 and can't get above the 65, well, we could easily just come right back down here towards the 60s and the 50s. We'll see what happens there on Micron Technology. Let's go through some of the stocks that you guys are looking at. AMD and NVIDIA sank. Yeah, it definitely sank. GOLD doesn't look too bad. Now it's getting into the 1980s. I'm looking for a 20 break on that. We'll see if we get it tomorrow. Not a bad looking stock today. I'm flat semis at the moment. Let me look over the chart. Yeah. What do you think about the semis, Walter? Always willing to have you chime in. You too, Easy. You guys in the chat. You guys are always willing to let me know what you guys see in the industries and sectors. That's what it's all about. Hopium for an A and B beat because I hate Intel. We'll see what happens there, Urban. Can't blame you for it. We'll see what happens there. All right, let's go to some of these other ones mentioned in the chat. I saw OGN. I saw some other ones. Holding MLGO. Let's take a look at that. MLGO, software application name. Pullback today looks significant on the day, but let's take a look to see if it can find some support. It broke out of this area and broke down through it, which was a $2 spot. So $2 makes sense for it to rebound from there. But the only question is, will it come back down towards this wick? That's that 182. I really wouldn't want to see it break down through that. That'd be definitely the area where I'd definitely run away from the trade if I was long. But we'll see if this can get back up through the $2. Really needs to get back here towards 235. That's where you're going to find your first kind of resistance area. We'll look to see if we push through there. And then you got like the mental hurdle of 250 and 270s to the upside. Micro algo. I'm pretty sure this is kind of more just trying to play the AI names. I can't blame you for it. I've been keeping an eye on some of them. I've been keeping an eye on like CXAI. I still think this one's setting up for a nice little move and could make a move higher through 14 the next couple of days. So we'll see if we ever get a nice little bullish day on some of the AI names. I saw you had another one, ATXI. I'll take a look at that one. This is a therapeutic stock. This one looks cheap, but looks like it's just trying to get through that $1. Just remember, sometimes stocks get through the $1 and they don't last. What I mean by that is kind of like they did here, right? So like it was down below, getting towards the low $1 and then popped up really quickly right back down. So with stocks like this, you got to look in the history. And for me, this shows the stock that always pops and drops, pops and drops, pops and drops. It's not an uptrend that continues, right? And so that's where we got to be careful with an ATXI. I don't think it's a bad name, but like always, you just got to be careful. You choose your own risk assessment and your reward spots. Wish you the best on those. All right, catching up with some in the chats. Let's keep it going here. It's 3:52. I'm going to try to do as many as I can do. You guys don't stop. Throw those tickers. All right, Yeti was one that was mentioned earlier. Let's run through that one. Yeti Holdings really taking off now. And this one seems to me more like it's a cyclical play, right? This seems to me more like it's a summer type of play. I need to take a look in the history of Yeti and how it's performed in the summer months. But a feeling gives me that this has a tendency of moving towards the summer. We're getting towards May, right? We're getting towards June. People are willing to buy some things. Maybe they're going camping. Maybe they're looking at like, maybe they need a new cooler for the summer, things like that. Is this more of a hype play? I'm not sure. I definitely need to do a little bit more research on Yeti to see if this was maybe like a ratings or something. I'm looking at it right now to see what happened. Looks like announcing reporting date. When do they report? They could report in 9 days, May 11th. We'll keep this one on watch. Nice little push there higher on Yeti. Looks like on Thursday, March 9th, they had recalled 1.9 million cooler and cases sold by Amazon over a magnet hazard. So that's not the best, but yet they don't care. They shrugged that to the side and pushed it higher today. So we'll see if it can get a little bit higher. Next stop, I think around 44. Let's see, this 44. 22s, yeah, 44.22 area. We'll see if we can get back up there in Yeti. Not a bad little move on the day. Hourly pushed higher through the 42s. I'd be looking for some pullback into the 41 and 41.20 area. We'll see what happens there. All right, WKHS could now get a piece of the USPS contract. Man, Rashad, where were you, man? We talked about this a little bit at the beginning of the show. We'll find out if it happens. Lucid Living, man. I see you in the chat. Lucid Living. What's going to happen with Lucid, man? I'm keeping an eye on it. IBRX. I'll take a look at that. I'm just keeping flowing through. You guys can keep putting up some stocks. I like how this one's keeping the trend. So remember how I talked about the last one that kind of popped and dropped? At least this one has a tendency of sometimes popping, dropping, and then continuing a trend. So let's see at this one. You can see how it's starting to continue that trend. It pulled back and held that pullback. Now starting to go higher. You got to be careful with a name like this because it has been going sideways. So always know you're out. Are you going to be risking off the 3 here, or are you risking all the way down here towards like the 250 area? Understand that, but it doesn't look like a bad stock. And one thing that I would do is I'd look at the hourly, and you can clearly see you're trying to break out through here. Will you get the breakout through the 318s going towards the 350? I'd keep it on watch. IBRX doesn't look too bad. Really nice little setup there. Just needs to make the move. Of course, below 3. And in my eyes, I'd be getting the heck out of there. But like always, you choose your own risk assessment. All right, SECO. I got you, Smoked Tuna. Of course, you got a smaller one here, but it is going higher. What I like is the hourly hold here. So when I'm looking at these charts, these smaller names, I always have a tendency of using the hourly chart. It's taught me a lot to try to find where the bigger pullbacks are. So like if you get a pop like this to 150, you could look for the pullback towards 108, risk off of $1 here, and then look for the push right back into that level, 140s, 150s. That's how I go about it, right? I could have risked, maybe got in there at like, let's say 108, risk off of $1, risked 8 cents to make what? 30, 40 cents to the upside, right back in it, boom, nail it right back to the upside. So it doesn't look too bad there. SECO is starting to push a little bit higher. I don't know the story here, so I do need to do a little bit deeper dive to understand what's going on there. But it does look like it wants to get back above 150. That's going to be the price level I'd watch tomorrow to see if you can push through it. Nice little move here towards the end. All right, what else we got here in the chat? AMC, Eric, both still holding huge positions. Oh, I would definitely stay away from AMC, but that's myself, right? You guys choose your own. If you guys can make it, hey, show me it, right? That's all I want to see, right? At the end of the day, can and where pre-show emails so you aren't blindsided during the live show. Yeah, Christine, you can always reach out to me. You can reach out to me at MoneyMitchBZ on my Twitter, or you can write me emails. If you have any questions, you want to learn a little bit more, feel free. Send me an email. Mitch@Benzinga.com. Feel free, guys. You guys can always hit me up. Thinking about it, wants to take a look at the Wayfair, and the Crow has his eye on one. So these are the last two I'll get into, but I got you out there, team. Wayfair here, 3165s, not a bad little pop off of the recent action. Of course, the one thing you got to keep in mind, though, is if we're going into recession and things like that, will Wayfair perform in that environment? It's been on a slow leak. And I think that that's one thing about Wayfair that I'd be concerned about is that we're almost to 2020 pandemic levels. And this is not the same environment, right? This is not the same environment. So if anything, I feel like Wayfair should have more price appreciation than it had back in the pandemic. This shows me a little bit of scary tune that we could break through this level and go lower. Does it mean that Wayfair has no value? No, I don't really think that. But hey, we'll see if it goes long. Thinking about it saying, no, I'm short. Well, if that's the case, you know where the breakdown is, right? Right below here through this kind of 26 level. Into that level. Where's the low here in the pandemic? 2170, 2625. So as you start going through that 2625, I'd look for a 2170 move. That's what I'll be looking for. That nice little breakdown towards the $20. We'll see if we get it there on Wayfair. I like the candles recently. I like this candle especially. Nice little rejection, trying to come back towards 40 and saying, nope, not going to give it to you. All right, back down there to 31s. We'll see if it breaks through the 26 level. All right, what other ones in the chat there? I got one more there. I know the Crow put one up. Let me try to get that back in there. Crow, which was the one that you got? VCIG, of course. Let's talk about that. VCIG here. You can see that one ripped through aerospace and defense stock and was definitely a penny stock kind of move. This was a monster move from $3 up there to $20. What a rip there. Really quick halt one, halt twice, halt three. It actually halted 4 times before giving you a downside move off of the halt. Be careful after 3 halts. A lot of times on that 4th halt, I see downside action, but boom, up there to 20s, definitely in play. Be careful with stocks like this. You got to understand the volatility in names like this, right? Like this stock moved easily $2.81 today. And that's on the 1 minute ATR, right? So be careful about that. Doesn't mean you can't trade these. Just always be smart and wise on the percentage moves that these are having and keep the risk in mind. That's the most important. Risk management, then comes rewards, right? First thing is just preserve that capital, baby. We'll see you guys like always right here on Start Swing Trading. Excited to have the rest of the week. I got Option Mike tomorrow. Going to reach out to Fromhertz to see if we can get him on Thursday. And then we'll keep pushing further. If you guys have a trader you guys want to talk to right here on Start Swing Trading, you guys want to look into some ideas, I got a great idea from Urban's Farms right today in the chat. That's what it's all about. Someone talking about AI plays and how those can actually be shorts that we can be looking for on companies like Chegg. They got destroyed because AI is taking leaps forward, right? Well, we'll look for more plays. I'll try to bring you some of those tomorrow. So stay tuned right here. Start Swing Trading, giving you trading ideas, talking about what I'm taking. And of course, trying to be fully transparent, showing you guys what's going on in the market, what was hot, what was not, what's rotating in, what's rotating out, and always trying to keep you guys in the informational edge. I hope you had a good time here today on Start Swing Trading, and I will see you guys bright and early on Pre-Market Prep. Stay tuned. It is Tuesday, so that means we got a little bit of Cannabis Insider coming up next. I'll see you guys in a few. Hit the like on the way out.